of the Wolf Web 3 Spaces. But you guys already know we're on video stream now. We can't be stopped. We've been doing a lot of podcasts and stuff lately. That has been awesome. And figured we'd expand a little bit and dive a bit deeper into some of the things that we do on our spaces. One of those, as you all are familiar with, is the Market Talk Spaces. We do those a few times a week. We got some of the superstars that are typically along for the ride on those. We got Bits of Wealth in the house, and we have Crypto Data in the house. Two kings. We love these dudes, but really in this like series, I guess we're gonna grab 1 to 3 people, just dive a bit deeper into their trading psychology, some of the things that they look for, ways that they think about trading, things like that. And so that's kind of the goal with this. And we'll just get a bit more of a deeper dive, smaller panels. You can actually see the charts we're going to pull up. We got Bits of Wealth kind of here. We have Data's right in here. So we're going to kind of dive into both. I figured we'll do just like, oh God, hold on, remove. Okay, there we go. I figured we'll just do like a quick intro on each person here. So I kind of gave my little 20-second intro. Bits of Wealth, if you want to jump in and give a quick intro, and then we'll dive in. Maybe like a quick thought about a quick comment about when you got started trading or something too.
Yeah, so I first got started in looking at investments and stocks. This was probably around 2009-ish, 2010-ish, somewhere around there. And I was working. I had a 401k going. I was starting to get interested in some of that stuff. And I hadn't really paid a whole lot of attention before that, but I was very business savvy before that. So I always had an interest in finance and money and entrepreneurship. But then I started looking at the markets around 2009, I believe, and found crypto in 2017. Had some friends telling me about it for a couple years, but it didn't seem real to me, so I didn't give it a whole lot of weight. And then around 2017, it was starting to pick up a lot of momentum, and people were calling me and telling me, hey, you got to look at this. And I watched a couple Bitcoin documentaries. Ooh. And read, like I did the deep dive on
that's Bitcoin, a proper right? Deep dive right there, Bits.
Yeah, no, I watched several of them, and I read a bunch of written stuff, and just I went all in, and I was like, I got to figure out this Bitcoin thing. And so I made my first Bitcoin purchase. I believe it was like June or July of 2017. Bought all the way up to the top. And and then saw it quickly give a lot of that back, and I was like, what the heck is happening here? It just completely was like unaware of everything. So I quickly realized from that I needed to learn something. I needed to figure this out. I needed to understand what was going on. And so I spent the next couple years, late 18, all of 19 and part of 20, just really learning to trade and taking courses and reading books and watching free content online and learning Forex and then learning crypto and just trying to understand it all, because I knew I didn't have an edge and I knew I needed one. So yeah, and today I do trade. I work from home. I'm basically just trading and working with a couple groups in the crypto industry, doing advisement, doing a couple other things. I've got a lot of professional experience in startup and building businesses and running operations and stuff. So I've brought some of that to the table, on top of what I understand about the markets.
Love it, bro. Awesome stuff. Well, I appreciate the introduction there. I'm excited to kind of see what other things to pull up on the charts. Before I go to data, if you haven't already, by the way, this is to you guys as well. If you guys want to retweet it, I didn't know if you set up your X's to stream to your own account, but I'm going to go ahead and retweet it from the Wolf or from my personal. But we should be live on video on Wolf Web 3 if you guys wanted to retweet for your communities. But anyways, let me throw it over to Crypto Data, get a quick little intro and some comments in regards to when you got started with trading, and then we'll sort of dive into this.
Yeah, so glad to be here. Similar background to Bits. So I started trading around 2012 when I got interested in the financial markets. During that time, I was getting the degree in finance, so I was kind of already interested in that field. Funny enough, though, I did start in penny stocks. So anyone who knows penny stocks, they're extremely volatile, even more degen than meme coins, arguably. So that was kind of my first jump into the pool, so to speak. And then switched over to normal stocks. They're a little bit more stable, but then I wasn't getting the returns that I was used to. So then went to options. But as you know, those can be a lot more difficult because there's like 5 or so different things to keep track of. So basically during that time, I just learned more about technical analysis and charting and support and resistance levels, et cetera. And then in 2017, that's when my dad was telling me about a friend of his who was trading 6 figures and basically wasn't thinking anything of it. And it was in crypto. And during this time, there weren't many coins around. So we had like Bitcoin, Litecoin, Ethereum, and XRP, and maybe like a few others, but those were the main ones. And so I decided to get into it, made a Twitter account and started researching and looking at the big accounts and studying what they were talking about and, the ones with a good track record. And similar to, stocks and options and stuff, I mean, technical analysis was a big part of it. So I started focusing on that more and then started focusing on, what makes a good project or, what causes things to pump. And then you kind of learn about, the whole background of crypto and what people are looking at. And from there, I just started getting smarter about the different narratives and the different rotations and kind of how that is tied into crypto, because crypto is very narrative driven, whereas stocks, in a sense, there is a narrative like driven. If, say Apple's doing good or Nvidia is doing good, like tech stocks can bring everything else up, but it's not as prevalent as with crypto, where it's like, with meme coins, if you have trends like the dogs or the cats, or like, okay, you have AI because OpenAI released something big, so therefore AI is going to be big in crypto now. Like there's those kind of things that more so focus on outside events, like in the macro world, like a lot more than the actual event in the macro world would contribute to, those stocks pumping, for example. So that was something I realized. And then just throughout the years from 2017 to now, I focused a lot on narrative trading. I got more into VC investing, so like private sales, seed rounds, et cetera. So that was really big, and just learned how those operate and what makes a successful private sale and project. And then from there, just got a lot more into TA and started really posting more about that, because I started realizing how much, how much it can predict price, basically. Because again, while they are just lines on a screen, they do become self-fulfilling prophecies if everyone's looking at them. And of course, you can combine, the volume profile, the RSI, MACD, stochastic RSI, all those indicators to help with that confluence. And then that'll help it become more accurate per se, because again, it's kind of takes everything else into account. So just overbought, oversold, et cetera. So just kind of factors in human emotion, which is real driving force of crypto. People are very emotional, much more so than stocks, because there's a lot more inexperience in crypto. So people act on their emotions more. There's not as many HFTs. So like high frequency trading, like algos trading in crypto, they're starting to get more saturated as more TradFi people get into crypto, but still mostly people who act on their emotions. So you can still take advantage of that, at least for this cycle. But yeah, I'm just focused more on posting about technical analysis on my Twitter account, and then also on projects that I'm seeing a lot of hype for based on certain narratives, and being able to take advantage of those before they really blow up.
Love it, bro. Love it. That was awesome. Very cool. Very cool indeed. You guys have been trading for a while. Mine's very short compared to that. Literally last bear market, I got bored, and I had all my friends in Seattle who all trade, and they're all part of this big trading group in Seattle. And I was like, what am I doing, bro? I have like all these people who day trade every single day, and I'm just not going to learn. I'm like, that's so stupid. Like, I feel like if God was looking at me, he'd be like, dude, what are you doing? I just dropped you in the circle of traders. Like, you're not going to learn anything. So I spent about a year traded with them, was waking up at 6, it was awful in the Pacific, on the West Coast, having to wake up at 6 a.m. for the trading sessions in the morning, and just like learn all that stuff and get used to following the smart money, just noticing certain levels to pay attention to wait for some price action, realizing that you don't always have to take a trade kind of thing. Like some of those great traders are taking, less than one a day, potentially one or two a week. So I really only spent about a year doing that. Didn't mark up enough charts probably to call myself even intermediate, but I definitely understand them. And what's crazy is the level that I know in my opinion, gave me a big leg up in the meme coin era, because all I was doing was paying attention to like where the last lower high was, and I was just making guesses off that. But I just knew that would be a point where people make a decision. So I knew there was going to be rapid price action. I just had to kind of take a chance on what I thought momentum felt like. And so for me, I was just plugged into the near ecosystem. So I had some of the, oh my God, did you see this comment? Sorry.
Yeah, that's one of the guys. That's one of the guys that
What are you moving
I've
like a
met
bear?
on Twitter, and he's in some of the groups that I'm in. So
I'm
yeah, he's a
dead,
good guy.
dude. What are
What's
you
Love
up,
it.
moving like
Coyote?
a bear? That's funny. But yeah, anyways, yeah. So that's kind of my extent of things. So, anyways, I'm just learning out here. But I do think I think it's relatively simple, but it doesn't make it easy. I guess if that's like I don't know if that even makes any sense, but that's how I've kind of thought about trading. So, anyways, I'm here to learn. Hopefully, over the next few years, these guys can convert me into a full-time day trader. So, anyways, let's jump in. We'll do a little bit of back and forth here. Bits, I'll turn on your screen, so prepare to close any tabs of strange things you might be looking at on Google Images. Not that you were before, but maybe you were. Anyways, here's Bits screen. We're kind of just going to talk about sort of, I guess, how you view the market when you're looking at these different time frames. People are looking at this thing and they're like, what is this red line? Why is it highlighted? And they're like, what is the yellow line? And they're like, what is he circling? And they're asking this kind of questions. So just walk us through a little bit how you look at trading, and then we can talk about maybe the indicators, and we'll kind of just toggle back and forth between you and data.
Yeah, one of the biggest questions I get is like, what is here? Let me pull it up. What is like all of this red in the
Yeah.
background, or what is all this green in the background? And so this is actually a newer technique that I started implementing probably about a year ago or so. I was doing it in a different way, but I found that this just gives me a little bit more clarity. Um, Hold on, I got a loud truck going by outside.
All good. Take this moment to like, retweet, and follow both of these speakers up
There we
here.
go. Yeah, I got a window open. If I need to shut it, I can shut it. But it's very nice outside right now, and I figured I'd get some oxygen while we're over
Of
here
course, of
streaming.
course.
But yeah, let me zoom out. So one of the things and I guess I'll share this. Like when I started trading, I thought that I wanted to scalp. I was like, you know what? Um, I need to get as many trades in as possible, like all the time. And I was journaling all of this just on a notepad. And man, there were times where I had like 20, 30 positions open at the same time, just
Jeez.
where I was scalping in and out of different things. And I quickly realized that it's just too much, and I was so focused on like trading the 5 minute and the 15 minute. I was trying to trade these small time frames, and over time, I feel that I kind of had the aha moment that a lot of traders do, which is that you can make just as much money, if not more money, trading less, but trading bigger moves, more profitable moves when you shift your focus from. A lot of people get really tied up in the percentages that the moves are giving them, and then they start using really high leverage. I started focusing more on like risk and reward ratios and understanding the ranges. So let me show you what I mean by that. So my charts look crazy, but what I like to do is I like to identify the high time frame support and resistance zones that price is moving in, and there's a lot of zones, and typically the way I identify these is I use the VRVP, which is the visible range volume profile. That's this thing here on the side, right? So I like to use the visible range volume profile, and this was something that was taught to me by one of the guys that I've gotten mentorship from. But this comes from guys that trade the U.S. markets. They use this volume profile here, and it's let me tweak it up though because it's very small right now. Let's go like 45. There we go. Give me a little more data. And so you use that in combination with price action. And so normally I would just kind of eyeball it and just say, okay, I've got some structure here and here where price is rejected, and then I try and identify it over here on this side, but I wasn't drawing these zones. So one of the big advantages that I gave myself was learning to implement these zones. So for example, like here, you can see that there's a gap, a crack, you could say, right, in the volume profile as there is here, right? So you start to find these little zones, and what you find is a lot of times they line up with support and resistance structure or with pivots. You can see right here in this volume crack, you've got the base of this, but you've also got all these prior pivots in price, right? So you have that. Can you guys hear my alerts, by the way? They shouldn't be coming through, just in case they're ringing.
No, I can't hear him.
Okay, beautiful. Yeah, I just want to make sure it's not messing up the audio. So I started identifying that instead of just trying to eyeball it. I'd look at the volume profile and I'd build these zones and essentially just start identifying like, okay, here's a big zone here, right? Oops. Does that align with price action? And then I was finding that it did, right? And so I built templates that I could then use, so that I got like my high time frame support template here. And what I found was that a lot of times these cracks in the volume profile aligned perfectly with key support and resistance zones, right? And this is something that I learned in the last like year and a half, is to identify it with these colored zones instead of just trying to eyeball it. But what's really neat is that price does tend to move inside of these, and it's this reminds me of that conversation where you're talking about that, oh, we're not in a range, or what is a range, or how do you define a range? Price is always moving in a range. To Bad Price's point, right? He made that comment. Price is always moving in a range. So what I would find is once you identified your high time frame zones,
we got to make that a t-shirt, Bits.
What was that?
Yeah, we got to
make a t-shirt.
Yep.
Yeah, exactly. Yeah. What you would find is that price was always moving from, a zone of resistance to a zone of support, and it was just kind of ranging, and you could play this, right? You could play this, and these were swing trades that you would, you'd wait, you'd anticipate a move, and sometimes you were waiting days or weeks for price to get into a zone, and then you'd position accordingly, and you'd wait days and weeks for it to finish the move in the counter direction, right? And so it's a little bit less about predicting where price is going to go, and more about having a plan that if price goes up here, what am I looking to do? And if price goes down here, what am I looking to do, right? And so once you have support and resistance zones, I'm looking to long support, obviously, and I'm looking to short resistance, or get out of longs if I'm only wanting to long. Let's say I am ethically or morally against shorting. Well, then you would be looking for longs down here, and you'd be looking to get out of them up here, right? Or if you're the inverse, you're looking for shorts, you're looking to get out of them down here. And so this has been highly reliable, and it's not 100%, nothing is. But essentially what I did is I just built strategies like this for everything. Like I got a whiff chart that I'm currently watching. I'm seeing if we can get it back up here, right? I've got a SUI chart that's also kind of moving. So I started implementing it into everything, because it's really made for highly liquid markets. It works better like in the top 10 by market cap. Obviously, they're heavier. They move more like smart money, like institutional money, and they move less like meme coins. But you'd be surprised how much of this can be applied to the micro caps or the small caps. But let me give you some examples of like how I would trade this. So basically, I'd be looking at this. I've got my zones identified. I've got a channel, which you could say is a volatility range that price is moving within. You've got a channel identified. There is a larger channel here at play too, like a descending channel, but let's just focus on this local one. So then what I would be doing is like on a 4 hour or on a 6 hour, I'd be looking to trade this range, right? So I'd be looking for entries at support, and I'd be looking for exits or shorts at resistance, right? So where are we currently? We're currently on the resistance end of this range. We're currently at the top of this ascending channel, which you could call our volatility range. You're also near some interesting levels. I was paying a lot of attention here at this prior swing high, which was this like 66.5 level that we'd been talking for a while. I was watching that as a potential trap. We did get above it, more so than I thought we would. I thought we would kind of just peek our head over it and potentially turn. It continued up, which is fine. I never gripe about something going deeper into a resistance zone, because it just means I get a better short entry, or going deeper into support zone because I get a better long entry, right? So I was watching this, and then I started to identify some of the structure that's happening up there, which is what all of this is, right? And let me actually hide this because it's kind of getting in the way. So these are just low volume nodes on the profile that I marked out with a box. But now that I'm up here in resistance, right? So I'm paying attention because I'm trying to find clues of exhaustion, right? I'm trying to find something that's going to tell me that this thing's going to roll over finally. And so we had the 2021 high up here, which was of significance, right? And we went right above that, and we trapped it and just came back down. We had the 70K level that I'm watching as well, which is, to me, that's the extreme of the structure, the macro structure that I'm interested in breaking. As long as we're within this 70K and like the 49K on the lower end, this could just come back down. This is just ranging. It's just chopping in here. To me, it's not doing anything of significance. So I'm watching this. I did enter short up here. And right now, what I'm looking at is I've identified a smaller channel within the larger one, a little descending channel here that is the current volatility range. So I've circled up here because I'm looking for BTC to get back up here potentially. Let me zoom in a little bit more. and not because it has to, but because if it does, I'm interested in playing up here, right? And it got really close, not quite where I was looking for. I'm still not in, I'm not adding to it, and I'm not opening a new position here. Notice that it's also in a crack on the volume profile, which is interesting as well, right? Because they tend to be these zones where price does not like to spend a lot of time in. It likes to reject from them, or it's going to just blow right through it if it's got enough momentum behind it. But it doesn't like to chop in these low volume zones. That's why they're identified that way, is because there hasn't been a lot of action that's happening there. So I'm not surprised that it's struggling a little bit here, but the top of the channel is still a little bit further up. We'll see if I get it or if it just rolls over. But I would just be trading the range. I'd be saying, okay, look, when we got up here, it had a little bit of resistance. It got a push up through it, and then it's held it as support. This to me was just trapping longs up here near the 2021 high. We quickly came back down below that. We have been holding this range here, like 66.7 to 66.2-ish as like a form of support. And yesterday when we fell below, we quickly reclaimed it, as you can see here. But I am watching this channel though, because my suspicion is that if it gets up here and if we're not done moving down, we could start seeing a little bit of exhaustion, and then it's just going to move right back down to the bottom of the channel, right?
I was gonna say, like, I feel like so much of reading the charts is just sectioning things off in your head, but then you just mark. You might. That's what like marking it up is. Like, I think it feels complicated because like, what could they possibly be writing down? What are these like Egyptian hieroglyphics? And you're like, no. I'm just noticing some things. I'm just making a quick note of it, so I don't have to like remember it each time.
That's all it is, and it's you do it within your strategy. Like, so for example, people would ask me, well, why aren't you longing this, right? Because you could make an argument that, hey, this would have been a good little scalp long. It's at the bottom of this range, right? Or why wouldn't you, if I know it's coming potentially back down to the bottom of the channel, why wouldn't I long it? And for me, that just goes back to my trade plan and my rules. It's in high time frame resistance. I'm not willing to open longs in high time frame resistance because there's a higher risk that we're rejecting from here, right? Like if we're down here in support and I see something bearish, I'm not going to short high time frame support. I'm looking long. And as a matter of fact, it's part of like what even Crypto Data was talking about it, where it's a lot of this is self-fulfilling. And what I found though in the last couple years of trading that made me more profitable is that I want to counter trade a lot of sentiment. So for example, you see this low at 49, you see this low we made here at like 52.5. A lot of people are looking at these levels for structure break. Like, let's say price came down here, for example. A lot of people would say that if we lost that, oh, we're breaking structure. For me, those are some of the most beautiful trap entries because they fake the majority of the people out, because most people are trading this stuff the same way. Right. And I found that the market makers and that the people with real money trade the opposite of that. They trap retail traders and stuff like that, which is why I have these labeled as trap levels up here. Yeah. I mean, if you go back and you look at this, right, what happened here on BTC? You had a high, price came down, we went above it. Most people up here, what were they saying right here? We're breaking out. Yep. We're getting above structure. Yep. What happened? We went down. You trapped most people. Most people are all trading this the same way. They're looking at breakout levels. And this has happened consistently. And it never works 100% of the time. But to me, it's given me an edge. Same thing over here, right? You had like a double top or sorts, and then you rolled over. So it is interesting for me. I like to watch prior swing highs and I like to watch prior swing lows for counter entries. I like to counter trade the trend. People are going to be getting super bullish up here. They're getting super bullish at range highs, and they're getting super bearish at range lows. I want to be on the opposite side of that. Yeah.
Well, and when I was talking about earlier that even the small bit of knowledge helps you in meme coin trading, one of those reasons is what you had highlighted there, which was that, that scalp entry you could have gotten. That's just by paying attention to other levels that the chart has come to. And you're like, oh, this is a point I should pay attention to. So if the chart comes near here, I got to be turned on. I got to be watching. So that gave me an edge because I'm like, okay, this is where we're either going to trend down from here or we're going to reverse, but it's going to be right here. And so I got to make my choice right there on the spot, especially with these memes that are low liquidity. I'm curious. I want to get crypto data into the conversation, either on anything that Bits had said, or would love for you to dive in a little bit on some of the things you look at on your charts, how you think about the trades, maybe a certain trading style, if you believe in ranges or if you believe ranges are not a thing. we'll throw it to you.
Hey, no, it's no bits of wealth. Yeah, hit the nail on the head. Ranges are definitely a thing, and fake outs are definitely a thing. And yeah, it's always going against the herd, right? And so you have to know when to follow the herd, i.e., these big support resistance levels, but when to go against them, such as the fake outs that Bits was talking about. And so for myself, I do a lot of similar things Bits does. I know he has the volume profile up and he has a lot of the things. I just use SR lines on high time frames. Like he was saying, they're going to be more reliable. There's going to be, because there's a lot more data within each candle. So like I like to use the daily and the weekly. Sometimes on newer coins, I'll go and use the 4 hour or the 1 hour, right? Like especially even meme coins, they can technically still respect support resistance lines, but they're not as accurate. So take that with a grain of salt. But yeah, no, I completely agree. For myself, I like to incorporate a lot of patterns as well. So I have the SR lines here on Bitcoin on the weekly. And then I also have, you can see this downward channel here that I like to draw. So in a way, if you zoom out, you can see it's actually a bull flag. So for anyone who doesn't know what a bull flag is, basically you have like a big pull to the upside, then you have downward chop for, X amount of time. And then usually what happens is you end up either breaking out fully from here, or you end up having a few more days of chop, going back and forth, and then eventually break out to the upside. And that would confirm it. So that's something I've been watching recently, is this bull flag that we've had. And I've been posting about it for a while. And on Bitcoin, you can see here that we've been in this downtrend since March, and we just closed the weekly above it on this trend line resistance, now turns support, and we are bouncing back above it. Now, if you go to the daily time frame, you can see that it's a little clearer. So here you can see it's even more so, we closed the daily and bounced right above that trend line support. So it's something I'm watching very closely. Now, also, I like to incorporate moving averages. So this green line here is the 50-day moving average. This yellow line is the 100-day moving average. And then this kind of pinkish purple line is the 200-day. So these are very common moving averages that you'll see a lot of traders use, and they tend to act more so as support or resistance levels. Again, you can see a support, resistance, even acted as resistance here, resistance. And so again, they aren't foolproof, but I find more so than not, they do act as some type of SR support resistance. Even right here, when we had Bitcoin bounce off of the 200-day EMA, the last time it bounced off the 200-day EMA was all the way back, and I did this purposefully, but all the way back in October of last year. You can see here that we kind of bounced around, but we kind of stayed above it more or less. And then we took off. And then, but these previous times, you can see we went below it, rejected off it, went below it, couldn't really bounce off it, couldn't bounce off it. And then finally here we bounced off it. And that's when we started taking off. So those are some things you can use as well. But yeah, so I like to use these. Some people use the 21-day EMAs, even like the 13 or the 8, lower ones. So it just depends, whatever works for your trading style. If you're more scalping or swinging, just depends, those higher ones versus the lower EMAs. But yeah, so I try to incorporate a lot, and then with indicators as well. So you can even see here that you can incorporate these patterns within indicators. So like, for example, for the RSI on the weekly, I incorporated kind of descending wedge pattern. And a descending wedge basically is a bullish pattern that usually breaks out to the upside. So you kind of have a constriction here, and then towards the bottom, usually bounces off support, trendline support, and then breaks out. And then from there, it's kind of off to the races. So here, what happened was we broke out, got above trendline or this signal line. So on the RSI and trendline resistance. So it's kind of a double whammy there for the bullish side. You can see that was around this level, and basically retested supports, as Bits said. Look for those big support levels. They usually wicks below them, and then we continued a lot higher. Now, what I'm looking at here is possibly we usually do have retests of this signal line. So which could mean, possible further downside to the 65.4 or even back to the 62K. This would not surprise me if we went back down here. But it's just to know, how does the structure look? Where are things, if you zoom out. And so right now, a big thing I'm watching is just this trend line support here. If we close the weekly below this trend line support, say we close it back at 65.4K, then, okay, maybe we aren't technically, it wasn't a breakout, and that was just, one of those fake outs, and we're still in this downtrend line. And then basically we keep that as we previously were. But with that, I'm still tentatively bullish. We could wick below. Again, we still have 3 days, I believe, 3 or 4 days before the weekly close. So, anything could happen in between then. But yeah, I'm just watching like the RSI levels, the trend line supports with the horizontal supports, and then you can see here these moving averages. Now, on top of that, something that I also look at is things such as total 3 and USDT dominance. So these are indicators that many people don't really look at. They'll just look like Bitcoin, ETH, Sol, and maybe like the ETH BTC pairs or the Sol ETH pairs, right? But like if you also look at these total 3 and USDT, USDC dominance charts, it can kind of give you a different perspective of the overall market. So when I'm looking at total 3, this is the total market cap excluding Bitcoin and Ethereum. So this is kind of a way, it's kind of like an altcoin metric in a sense, like the total market cap of altcoins plus or minus. I think it gives you like the top 150 or so. So it doesn't give you everything, but the majority. And so what I like to look for here is I was actually looking at this trend line here. It's kind of a fractal that we had. And there's a lot more visuals that I had, but just to keep it simple, I just did this downward trend line. And this was from 2021, 2022. And if we followed this fractal, basically we would have had, 3 to 4 months of more basically bearish sentiments until the beginning of next year. But what happened was, we had the same fractal playing out, rejected, and then finally we actually broke out. Whereas here we rejected to the downside. So this was kind of my thing. Same with the RSI, we broke out. Was like, okay, maybe we are starting the second half of that bull run now after that 7 months of consolidation. So you can see here on the weekly, we even bounced off it as, trend line support. So that was something that was bullish, right? So
That's
I'm just
crazy,
isn't it? Yeah. And these are things that, again, like I'm just watching very closely and to see, okay, is there a trend shift? And that's the biggest thing in trading is you got to look for those trend shifts, whether those, closes above trend line resistances or horizontal resistance, or even RSI close above the signal line, because we've been below it since April, right? On this total 3. So that was the downtrend. And finally, you can see here, we rejected off the signal line twice. And finally, we broke above it. And that's when things started taking off. So potentially we could have a trend line shift here or a trend shift. And now we're in a, bullish trend. So watching this, and then you also take into account USDT dominance. So this basically tells you more or less how many people are getting in or getting out of USDT. So are they selling it to buy their altcoins and Bitcoin, or selling their altcoins and Bitcoin to get back into stables? So this is another trend that I like to watch. Now, something I drew earlier was on the weekly, you had this trend line support that started from 2017. So you can see USDT dominance bounced once, twice, 3 times, 4 times, 5 times. So I knew, okay, this is a big trend line support level to watch. Then lo and behold, back whenever we had that huge run back in, January, February, March, we approached this trend line support, and that's when we bounced off of it. And you can see more or less mid-March is where things started getting choppy, and we started that downward trend for 7 months. And so this was something I was watching as well. So when we get back to this big trend line, I'm expecting the same thing. Now I went even further and actually drew a trend line within this big trend line support. And you can see here that we've bounced once, twice, potentially 3 times. So I'm watching this very, very closely. Technically, we closed the weekly below this trend line support, but since it had, only a few touches versus 5, technically it's not as strong, but something I'm still watching. So if we close back above this, it'll be very, very bearish, and meaning we could start seeing, a couple more weeks of downward chop. But if the weekly can close below this, and even more so below this horizontal support, then I would be looking at, okay, we're going to have, a few more weeks of bullish price action. So another thing I'm watching on the close. But yeah, so these are just levels I'm watching. Like Bits does, it's just kind of a different perspective. He's still incorporating volume into it, which is, again, the same thing as support resistance, but just different metrics I look at, and, a few different, like I said, like dominance, and then other things to watch for versus just the actual price. So, and you can even see here on RSI that USDT dominance, it crossed above it in April. So it started the bearish trend, bounced off it, and then finally closed below it in mid-September. And that was technically the start of the bullish trend when we had that green September and now potentially green October. So,
yeah, let me share a chart that'll I think add some value to what Crypto Data just shared there, because it is talking about those same dominances here. So I'm looking at the same thing here with stablecoin, and he's absolutely right. Like, it is at a very interesting and I would say like decision making point right here. So this is the daily, and I'm doing it a little different. I've got USDT combined with USDC and DAI on this same chart. So it's looking at all of that aggregated. But 100%, he's right, right? Like this was that low, and we've kind of been going up inside of this channel. I did the same thing I do. I use VRVP to identify some of these ranges here, these like zones where price tends to be rejecting from and supporting from. And so I'm watching this very closely because number one, it is kind of trying to find a support here, but at the same time, it does look like it's breaking and potentially back testing the break of that channel, which is on Crypto Data's chart was that trend line. So we're absolutely at a very interesting point here where if this pushes off of here and continues lower, we're going to see a lot of liquidity flow back into alts and into crypto in general. Whereas if it reclaims this range and pushes up, then we're probably going to continue to bleed. So he's absolutely right. Like this is a very pivotal time right now in the stablecoin dominance, and I'm using that in combination with the totals. Like I'm also looking at the total charts and trying to figure out, okay, we did reject as I was kind of suspecting up here. Is it just gonna turn around here and continue up, or is this gonna continue to roll over and potentially try and find a bottom here? If you were to try and find like a trend somewhere down here, like is there a point somewhere in here where maybe we're gonna get a bounce? Honestly, anything above this is a higher low, so I wouldn't be super concerned. But and then you do have this rough zone here where a lot of the pivots have taken place. So yeah, it's the stablecoin one. I think is one of the more interesting charts to be looking at right now. I think there's a lot of information here, and it's been very reliable. One of the places that I'm kind of looking at is here, though. In the past, we did have this little bit that fell out of the channel, and when it reclaimed it, though, it was a violent reclaim up, and crypto just bled pretty aggressively there. So yeah, who knows? I'm paying attention here. It's going one of two ways, and I kind of had these outlined. It's like it's either reclaiming or it's rejecting. Which one is it? I don't know yet, right? And it's not my job to know this. Is like Garrett said on that video that he gets a lot of hate for. It's not my job to know which way it's going. It's my job to have a plan for what happens if it goes down or what happens if it goes up, because no one has a crystal ball. I mean, you can get an edge, like to Crypto Data's point, you can really give yourself an edge when you find a system that works. But even those are not, he said it, nothing's foolproof. Like at the end of the day, it's going to invalidate stuff. But if you find something that works 70% of the time, 80% of the time, that is a massive, massive edge. Like I think people underestimate how big of an edge finding a system that works like that. And then when you have losers, it's okay, because those losers lost within your system, which still make them a good trade because you followed the system. Like to me, a bad trade is when you deviate from your system or from your strategy. A winner that deviated from your strategy is a loser. A loser that deviated from your strategy is a loser. But a winner that followed your strategy or a loser that followed your strategy are both good trades because you were disciplined and you followed your strategy.
Dang, that's definitely a soundbite. I'm gonna clip for later. 37 minutes, 40 seconds, perfect. Legend. Bits, that was dope, dude. That was some pretty cool analysis. I'm curious on this, and this can go to either Crypto Data or Bits, in regards to indicators or things that people like the TikTok traders talk about. It's hard to know who you can trust these days, but what are some of those kind of fluff indicators / fluff things that don't matter as much as people say they might, when you are looking at just like your experience trading these markets? Crypto Data, maybe you want to start if you have any thoughts.
Yeah, so bluff things. So do you mean, for example, like if there's 50 or 100 KOLs in a project that's
no, not bluff, fluff, in the sense that like some people claim that RSI is a total just a nothing burger. They think RSI is totally nothing. Some people say it's everything and they trade just off RSI. Other people, I assume, just do the normal thing and incorporate it with their other indicators they're looking at. But are there anything in trading that you've seen from like people who maybe shouldn't be trading and teaching people how to trade, but they do, and then you hear some of the advice they gave and you're like, that's not as important as this guy's making out to be, kind of thing?
Gotcha. I will say, I mean, I've seen a lot where people say, TA is hocus pocus and it doesn't work. And I would invite them to actually study it for more than 2 seconds and actually look more so at confluence. So yes, if you're just looking at horizontal support and resistance and that's it, maybe it's not as accurate as, you would think. But if you incorporate SR lines, again, with those volume profiles that Bits was doing, along with trend lines, along with the RSI indicator, then that's when you can increase, can create that edge and help increase those statistics where maybe before it was 55, 45, but now incorporating all those others, it could be 65 or 70. Right. And I think that's when you combine that, because a lot of people like to do like, oh, it's one or the other. Like, no, you can have both. Like you can have TA and also use fundamentals. And fundamentals can be even something just as simple as emotion, sentiment. Right.
Yep.
So for example, if something is approaching a major support level and the RSI is oversold and it's at a trend line support and sentiment is the lowest it's been in 3 months and the fear and greed index is 20, right? Like there's all these bad things. And we just got $1 billion worth of liquidations for longs. Like, okay, maybe there's a good chance that this is the bottom or the next few days are going to be the bottom, right? And so that's something I look at as well, is I combine both. And I think that people live or die by the sword on like these, oh, it's got to be TA or it's got to be fundamentals. And I'm of the sentiment that it can be both, and it should be both, because you should have a little bit of both of, if we're at a major support level, but World War III breaks out, that support level is not going to hold. Like we're going to wick through it. Now we may close above it, but we're going to wick through it for at least a couple K. And then that could be your opportunity to snatch up some cheap coins, because usually those are the events that end up marking the bottoms because fear is at an all-time high. And so that's where you can use that to your advantage. And like Bits was saying, is there are fake outs a lot on these support resistance levels. But something little alpha that I like to tell everyone is, okay, decide where you're going to place your stop loss at. And instead, that's where you place your limit order. Because people hunt for stop losses, right? These market makers hunt for stop losses because they want to get that liquidity. So say you enter Bitcoin at, let's just say, I don't know, for example, 60,000, right? Okay, I'm entering at 60. My stop loss is going to be 57.5 because there's a support level at 58 or 58.2. Well, actually place your long at 57.5 because probably it's going to end up trying to hunt those stops and then go right below it, right? And then you're going to have a generational entry at that point. And a lot of people don't do that because they think they're going to miss the move, when in reality, there's hundreds of moves, every week. And so I think that as long as you don't try to make it black and white and try to like incorporate, good indicators together, I think the top ones, in my opinion, RSI is probably the top because most people use that. And if you can incorporate, even those patterns within RSI, like descending wedge or others, or even just support resistance lines on RSI or trend lines on the RSI, those can be useful as well. And so trying to incorporate that with your SR lines are really good. And then obviously MACD is going to be one of the top ones as well. Now MACD is lagging. So by the time you have those lines cross over each other into like a bullish trend, like the blue and orange line, usually the move's already happened, probably 3-4 candles back. But in a way, it can be a confirmation of the trend change. So just look at that as well. And then stochastic RSI is a really good one as well. It's not the exact same as RSI, but when you have that in confluence with RSI, then usually it's a good trade. So those are ones that I like to use along with the moving averages. But yeah, I think the biggest fallacy people have is that trend lines don't work or TA doesn't work just because maybe they're only looking at one form of TA and they're not actually using confluence as much as they should, incorporating trend lines, incorporating other indicators. And that's when you really get the most bang for your buck, so to speak. And then a notch higher is actually putting in sentiment with that, and looking at those sentiment indicators and those liquidation metrics, and really form a full picture of, okay, what's going on? Where are people putting their money? Where are they getting scared? And then you can just capitalize on that.
Dude, love that. Love that answer there. That was awesome stuff there. Bits, would love to get some thoughts over from you.
Yeah, I'm a volume guy. Like everything I do is based on volume. So for me, I'd say if I had to only have one indicator aside from the candlesticks and like the standard buy sell volume, I'd have the VRVP. I'd have the volume profile, just because my strategy is so dependent on this. This tells me everything. Like for example, it's not a coincidence that it started turning around right here where the volume starts to kind of drop off, right? Like a lot of times when you're setting your stops, like if I was entering, I'd make sure to put my stop behind this, right? So for example, if I was entering short somewhere right here, my stop would not be here. It'd be behind that low volume profile because there's a chance it could still come up here. But
Right.
this is like an extra buffer of protection, right? It's an extra layer of protection where there's, according to this, statistically, there's a lower probability that price is going to come and hang out up here, right? And you just got to look left and you'll see that it doesn't like to hang out right here a whole lot. It's either wanting to be above it or it's wanting to be below it. So when you're above it, you could, like, if you were looking for a long up here, you could be placing your stop below that low volume, behind this low volume, right? So I use the volume profile a lot. I do have some other ones though, but they're mainly always hidden. I really don't look at them. I've got the buy sell volume. This one here, colors the buy volume green, the sell volume red.
Nice.
This one's been a really good one. I do have RSI, MACD, and then I've got some other volume oscillators that I'm looking at. But I really only pull them up when I feel like I'm not getting clarity with price action and with the volume profile, and I'm like I need a second opinion or I need further confluence. Then I'll pull it up and say, okay, you know what, that makes sense. This does look this way or it does look that way, right? So it's more of a getting like a second opinion of sorts, but my main trading is driven off of what's here. I do also turn on these vector candles, which color based on volume. So for example, this actually here was interesting, right? So a lot of times you get high volume pushes right before price turns around, especially when it's near a low volume zone or where it's near the edge of a channel or something like that, because it's like this is trapped volume basically, right? It's like they're enticing, they're pushing on high volume, quickly sells off in volume, and then it comes down. So I mean, just to quickly explain these, because if you're not familiar with vector candles, what it does is it basically colors the candles to signify volume. So in here, a solid green or a solid red candle have either 200% or greater than 200% volume of the prior 10 moves. So it's telling me that this red candle had 200% more volume than the previous 10 candles before it. So this is a significant candle. This green candle here had 200% more volume than the prior 10 candles before it. So this is a significant buy candle that could have told you, hey, this is likely a bottom here, a local bottom. This one here has 200% more than the previous 10, probably telling you reversal's coming. The violet colored here and the blue, those are 150% or more. And then the ones that have just gray, either inside or just gray, those are just standard volume. It just means nothing significant is happening. And so when you pull those up in combination with this, you'll see that this green vector candle here, which was a big volume candle, did have higher volume than the other ones. Look at the green volume, how much higher it was than the other ones, right? You look at, look zoomed in, you can see it's almost 50% more than these other ones down here, right? So you'll see the same thing with the red candles. This big red candle, this indicator told me this was a high volume move, but if I wanted to confirm that and I pull up the buy sell volume, I can see that yes, that was a high sell volume move compared to the previous ones, which were significantly less. So yeah, I'm a big volume guy. I just really have found that for me, trading based on volume helps me be more consistent and more profitable. But this is one of those things where everyone has to find something that works for them, because I could show this to 10, 20 other people, and some people are not going to find that it works for their style, or it works for the time frame that they want to trade on, the frequency that they want to trade at. It's a very personal thing. I think you have to find something that works. Learn from people that know what they're doing, number one, right? Find a mentor, but then build a strategy and tune it so that it kind of works with your own personality and your own goals and the time that you're willing to commit to this. Are you wanting to trade a couple times a week, or are you wanting to trade a couple times a day, or are you looking to trade a couple times an hour? I mean, the strategy is going to be very different based on that answer, right?
Dude, definitely. And it's funny, part of the reason I want to get back into the trading is simply just to participate more in the spaces. So I was like, maybe I should do I should start with like a $50 bag, like literally start with zero risk at all, and just see if I can take these, like, still following the same principles, but instead of $100 or $1,000 order, it's like $6, and then I just build from there. That way I still get the rush and the practice in. But I don't have to worry about feeling like I'm gambling money if I'm kind of just doing things to try them out and test them out. But it's good practice. I feel like there's probably nothing better you could do than to just consistently mark up many charts a day, just to get the experience in. I feel like that's more than likely the highest ROI practice you could do besides just being around traders and hearing them talk about stuff. But yeah, curious, we're about like 50 minutes in, so we're going to wrap soon, but I'm kind of curious on y'all's thoughts on the most practical advice that you think is helpful for traders. Maybe they're not a beginner, but they're just like right between beginner and intermediate. So they don't totally suck, but they pretty much suck,
Yeah, I'll say for me, it's just repetition is the biggest thing. Like you were saying, Cade, repetition is going to be your friend because that's when you'll be able to identify these patterns, such as, these bull flags, these head and shoulders, or double tops, double bottoms, and you can see them before they actually start forming because you're literally looking at them every day. You're back testing, you're going back and seeing, okay, this rejected because of this pattern or because of this indicator, et cetera. So that's my biggest thing is, the more repetition you have, I think that's going to help with your confidence a lot more because then you'll have more confidence to take that trade because you've seen that pattern hundreds of times. Whereas people who are just, trying to get in, get out, that's when you find people who are acting more emotionally. So because they're not as confident because they didn't put in the time, they didn't put in the practice. And now they're just trying to buy something because one of their friends told them to. And that's why leverage gets such a bad rap because while yes, leverage is extremely risky and you'll probably lose your money, the people who are successful at it are successful because one, their emotions are in check, but their emotions are in check because they put in the reps. And the one, they started with paper trading, right? And then you slowly increase your balance. So, okay, maybe then from paper trading, go with $100 and then 200 and then 500 and then, get more comfortable with trading with size and start with low leverage. So like I tell everyone, okay, 3 to 5x max. And then once you get more confident, start getting more accurate, then you can start, getting higher leverage there. But yeah, the biggest thing with TA, at least, is just you need to put in the reps because that's where you're going to grow that confidence and then be able to spot patterns a lot easier and a lot earlier than most people do. And that's going to increase that edge just a little bit. And again, every little bit helps in this game because people are only getting more proficient every cycle. And so you have to keep up with it. Otherwise, you're just going to become X liquidity like most people.
Dang. It's a mouth right there. Bits, any thoughts?
Yeah, I 100% agree. I think it's all about putting in the time. And I think what a lot of people mess up, though, is they want to jump right into execution and they haven't spent enough time in the analysis portion. Like the time that you're spending actually trading should be the smallest fraction of time. You should be spending a lot more time analyzing, laying out your strategy, identifying key zones and areas of interest where you're willing to trade, knowing what you're willing to do when it gets to those places of interest, journaling, reviewing previous trades, good and bad. Like all of that stuff should be the majority of the time that you spend, and trading should be the smallest amount of time that you spend. Because if you're doing all of that other stuff right, then the trading is going to be more profitable for you. So you're actually, it's like the whole thing, right? If you give a man, who was it? I think it was Abe Lincoln or someone that said like, if you give me 8 hours or something to chop a tree, I'm going to spend the first like 6 or 7 sharpening the axe, right? Like
I was about to say that. I saw that yesterday, I think.
Yeah, you have to, that's exactly how you have to think about it, is like preparation comes before execution, So think about like athletes, right? They spend 90% of their time training and probably 10% of it actually executing and performing, right? So that's how it has to be. And I think the other big thing I'd say is just develop a strategy. Have a strategy and be willing to stick to it to see it through. One fun tip I'll give is, on these charts, and here, let me just pull up like a naked BTC chart or something that maybe I haven't used. Let's try this one. Yeah. One thing you can do on these charts is, if you have trading views, use the replay mode. Use the replay mode. Go in here and either pick somewhere on the chart that you want to like zoom into, and then, play it in slow motion and just, maybe even, you kind of highlight what you think is going to happen, and then play it to see if that is what happens, and start studying the way the market moves here in replay mode. A fun thing you can do is you can also use this buy sell button that's down here to basically like paper trade these. So if I wanted to like sell one lot here and then I hit play and I want to let it go and I want to say, okay, if I had bought there, was I profitable? And let's say I decide to sell here at some point. Boom, red candle, I sold because I thought that was some kind of capitulation move. what ends up happening? Does it keep going, right? So I'm watching this, and I sold here based on this, based on the volume, right? Like it got into a low volume node. I sold. It could have gone straight through it, but you're kind of develop a strategy and just say, okay, does my strategy work? Look, there you go. See, it went right back into the zone. It's not doing anything. Let's say I wanted to buy this because I think it's holding as support. Okay, I'm gonna hit play. Let it go. Let's see what happens. If I bought there, was I profitable? Right now I'm losing money, right? It's moving against me. So you're kind of developing this in real time as you're watching this play out, and you're able to kind of back test and spend time doing the homework before you go and take the test, right? Per se. So yeah, I'd say use the replay mode. It's really cool. One thing you can do is in replay mode is you can either pick where you want to go or tell it to give you a random bar, and it's just going to go back somewhere in time, and it's going to give you a totally random bar to trade here. So why did it go away? There we go. So I don't know where it put me. It's not telling me exactly when this is, but it gave me just a random point in time on this chart that I then I then can say, okay, if I'm here, what do I think is happening next? Well, I'm in a low volume zone. I don't know. You got some volume above. You've got a little bit of resistance here from prior peaks or whatever. Let's play it out. Let's see what happens, right? And so you can play with this. So you use the replay mode. It's a free, I think it's a free feature. I don't know if you have to upgrade or not to the paid version, but I like the replayed mode a lot. I think you can go back and you can test a strategy after you've developed it to see if it actually holds any water or not.
Dang, yeah. Very nice, dude. Very nice. I know we're a little bit over time, so if you guys have to go, totally fine. Otherwise, there is a last question I saw in the chat in regards to algorithmic trading. So if you guys have time, down to stick around for this last question before we wrap. Are you guys okay, or do you guys got to bounce?
No, let's do it. I'm good on time.
Let's run it. Okay, current general sentiment on algorithmic trading. What is our thoughts? So maybe, yeah, I mean, either one of you, if you want to tackle this question.
By the way, guys, if my avatar starts getting crazy, every time I take a sip of coffee, I think the camera doesn't know how to recognize it. Look at this. Look at this one.
Oh, God.
It looks like he's like roaring or laughing or something.
Oh, man.
I don't know why it does that, but it's when I'm drinking coffee, it doesn't know how to react.
Love it. Yeah, no, I can answer that one first. Sure. Algorithmic trading. So I'm a fan of it. So I'm actually working on a trading bot right now. I think having a trading bot is probably one of the best things you can do for yourself. Now, with that said, again, a lot of back testing goes into that, right? So, and you also a lot of forward testing. So because what will happen is people will try to create trading bots for themselves and they'll back test 3 years of data, but they'll form fit their bot or their results to fit what they test. So basically what that means is they will adjust their trading bot to give a sell signal right at the top, and only it's only finished, quote unquote, whenever they can time every exact top. But maybe the conditions were so that whenever they time those tops, it's different from now, but they kept adjusting the signal until it gave them sell signals at the top, right? So that's what's known as like form fitting. And that's why forward testing is so important. So I tell people whenever you're building trading bots, like start, say, a year ago. So it's like start 2023 and backwards. And then from there, once you have it how you like it, then forward test it a year and look at that from 2023 to now. Do those indicators that it gives, is that, as accurate as what you were testing beforehand? And that's a way to kind of forward test it without having to literally wait, from the present moment forward for 2 or 3 months. Like you can actually just start your back testing a little prior and then do it that way. So yeah, in general, I say trading bots are good, but they just need extensive testing, and you need a plan as far as, okay, where's your entry criteria, and then what's your stop loss going to be, and what's your take profit levels going to be. So a lot of people I know, they have multiple take profit levels because, again, nothing is guaranteed. So they'll have like a TP1, TP2, and TP3 based off of either percentages or, usually it's just based off percentages. And they base that off of the back testing where, okay, when I got the signal, on average, what was the percentage move to the upside or to the downside? And then they can kind of split up their take profit levels accordingly. And then same with the stop loss. When I got a signal, what's the biggest candle that it went against me before it went, towards, my direction that I wanted? So was it against me 1.5%? And then they can adjust their leverage based off of those numbers. So Yeah, so I would say trading bots and algo bots are good. Again, a lot of them are not successful because either they form fit and they try to, make the indicator say what they want basically, but they aren't actually looking at, they aren't forward testing that data afterwards, or they're, they're basically they're not using the right indicators. Like it's only a few indicators and they don't have enough data. So maybe they have 10 entries, or they've back tested it maybe 10 or 15 times, but really you should be back testing it like 100 times. So out of 100 signals, okay, did you get it right 70 times out of 100? Or did you only get it right 30 times out of 100, right? And that's what you got to look at as well, is make sure you have enough data, because if you're only looking at, small amount of data, well, that's technically not enough to go off of. And then that way, maybe where it looks like, okay, 7 out of 10 times I actually won. Well, if you would have tested it 30 or 40 times, it maybe only would have been 50% of the time that you won, because now you have more data to look at, right? So that's my biggest thing with trading algos, is they can be very profitable, but you need to back test them a lot, not form fit them. So make sure you're forward testing as well as back testing, and have a lot of data. So preferably over, 3 years plus if you can.
Wow. Very, very cool breakdown there, Crypto Data. Appreciate that perspective. Bits, you got any thoughts on algorithmic trading?
Yeah, I mean, I think I agree with just about everything that Crypto Data was saying. I mean, I don't see them as a bad thing. I think that if you can find either one that exists that has a proven track record of success, it could be a good thing. Just know that it is going to experience drawdown. It is going to fail at times. None of them are perfect. Or if you're in the game of developing one yourself, I think he's absolutely right. I think you have to prove it out. One of the dangers, and this is not just with like algo bots or anything. It's a danger with TA in general, is that it's easy to try and make the chart fit into your bias instead of trying to fit your bias to the chart, right? There's a lot of people, for example, that have been looking at BTC price action here this whole time, and they've been calling, oh, this is the parabola or whatever. And if you notice, like, their parabola was like over here, and then it was here, and then it was here, and like at some point you have to ask yourself, am I trying to force something because I want to be right? Or am I truly interested in finding out what's actually happening and being on the right side of the trade, right? I think a lot of people mess that up. So to Crypto Data's point, as people are building these, I do have a concern around, these developers and stuff that maybe are cherry picking data, or are building it in a way where, it performs within a certain type of market. Because we have seen some that are like really accurate when the market's trending up, but when you're getting a little bit of sideways or even some pullbacks, it loses its mind. It doesn't know what to do. So yeah, I think it's all about that. It's about just, you have to have enough data, enough of a data set that it kind of accounts for all types of scenarios, and you're always going to have outliers. It's never going to be perfect, but it's all about the time. And so whether you're you're trading yourself and you're just manually trading, it's time behind the charts, it's time in the market. Same thing with the algo bots.
Yeah, and real quick, I will interject. I do have a couple buddies who actually have trading algos, and they are successful. But the biggest thing that people have to realize is most successful trading algos aren't earning like 50% a month or 100% a month, right? Most of them maybe like 3 to 7% per month. And because again, like the chance of you catching huge moves every single month on high leverage, you're going to get liquidated, like, or you're going to get stopped out more times than not. And so just have an idea, okay, with trading algo bots, like a realistic target, probably 3 to 7% per month. And then that's still going to be over a year, it's still going to be anywhere from 35% to call it 80% plus, which is still amazing for literally, one, you're beating the S&P, but two, you're not doing anything. You're just letting it ride. And three, you're doing it on size. So instead of, betting with $1,000, well, if you have a bot that's earning only that little, but is accurate, well, then you could put in $100,000, $200,000 and really make the most of it is where you make your bread. So yeah, I would just say people need to have a realistic perspective on what these trading bots are going to earn. And any trading bot that's promising you, like if you go to a website and they're like, oh, we're going to give you at least, 60% a month. I'd look at their data, how much they've back tested, what their criteria is for stop loss, take profit, etc. And maybe they just got lucky in the 2020, 2021 bull run when everything was up only and they were just longing the whole time. Like, okay, how do they do during chop? Because how a trading bot does during chop is going to tell you a lot, because most trading bots fail because they get stopped out or liquidated or however they're measuring their criteria. So just look at everything. Don't take a trading bot for face value. Like, always look at the data and see how much data they actually have back tested.
Yeah, 100%. Absolutely.
Beautiful.
Agree.
Beautiful. Love it. Love it. Well, gentlemen, it has been real. This has been high alpha dropping on the charts today. So I appreciate both of you guys just nerding out a little bit with me for the last hour, answering some questions. I feel like this was a pretty good stream, especially for people who are beginners, but more so for people who are in my boat, who are beginners, but they've have some experience on the charts. It's not totally hieroglyphics when they look at this thing and they can kind of make sense of it. I think it's really good for those people in the middle there. So I appreciate both of you guys, man. Definitely, guys, if you're watching the stream right now and you haven't already, give a follow to both these guys in the title. They should be tagged, so you should be able to just click on them and give them a follow. If you're on YouTube, their stuff is down in the description below, so you can go ahead and click their accounts and give them a follow for sure. Otherwise, I'll turn it over to Bits and Data real quick to plug anything they want to plug, call to actions, something that they're excited to announce, whatever. So Bits, I'll throw it over to you first.
Yeah, I mean, I'd just say if anything that I shared today, was of value to you, or if you're interested in understanding a little bit more, just follow me on X. I post a lot of stuff on there for free. Just mainly looking to share, how I'm looking at the markets, and then also I kind of look at it as like a live journal of sorts, because I can go back and see, did I call that right? Did I call that wrong? So yeah, hit me up on X. Feel free to send me a message. My DMs are open. Happy to look at a chart for you, or review something that maybe you're looking at. But yeah, I'm pretty active on there, and I tune into the Wolf Spaces every single week. So at least 2-3 times a week. So join us on there as well. I'm always bearing it up on there on the stage.
Let's get it. Data, over to you.
Yeah. So similar. So I'm on the Wolf Spaces as well. So if you guys ever want to join, usually Monday and Thursday, I'm on there. And then also X account, I stay active on there. I have my own Telegram linked on my X account, Data's Inner Circle. So I try to post a lot of good alpha there. And then also have my own Discord channel, YouTube, Instagram, TikTok, etc. So kind of find me wherever, but usually X and Telegram and potentially Discord are where I'm most active. So join me on there, and yeah, be able to help you guys out. Again, any questions, same as Bits, be more than happy to help. Send me a DM, and we can get something going.
Let's go. Guys, it's been real. If you enjoyed the stream, please repost it. Repost the stream. Give a follow to these two guys here. Have an amazing rest of your day. We have tons of spaces and streams now coming out basically every single day. In about 8 minutes, we have the RWA space. And then I think an hour after that, or 2 hours after that, we've got our trading space. So that's the one that hopefully I think these guys might be in it today. And then we're going to have a conversation about social media, music, and crypto with Siki. They're a pretty cool company right after the trading space. So bunch of stuff cooking. There's UFC in a couple days with some crazy fights I've seen on that fight card. So from people who are complaining that there's nothing entertaining going on the internet, you're wrong, baby. You got Wolf Fight 3 and UFC. We're going to make that collaboration happen at some point. Just putting that energy out there. All right, guys, have an amazing day.
Thanks, guys.
And
thanks, guys. We'll see you.